I'm Ali Patterson, and welcome to this episode of The Fintech Show. This time around, we're looking at how the customer experience has been impacted by incumbent banks' adoption of digital channels. Will the world's biggest institutions be able to retain customer loyalty while ensuring they're up to date with modern technology? To find out, we sat down with Bank of America and Nationwide to discuss their efforts in 2019. We also spoke to Quadient about how their customer communications management platform is helping businesses adapt to modern tech while crucially retaining the human element.
How critical is it to have a personalised customer experience in this digital age with all the tools that are available?
I'd say it's way beyond critical now. It's become the expected behaviour of customers, because in the financial world we do financial things, but in the digital world all the different industries combine. So the expected behaviour becomes the expected behaviour of the very best customer. Take as an example Netflix. The very first time that I used Netflix, the fact that it gave me a personalised recommendation of all of my different programs I might want to watch, fantastic. Second time, still revolutionary. Third time, neat trick. By the fifth time, I'm expecting it. By the 10th time, I'm not even just expecting it, I'm wondering why everyone else isn't doing it. And so all those different industries that are able to do that mean that when it comes to financial services, they've got to keep up. It's not just about who's the best in banking, it's about who's the best for delivering personalised customer experiences across all of the digital world.
What has been some of the biggest changes happening at Nationwide over the last few years, particularly when it comes to the way that you're using technology to interact with your customers?
I can hardly believe that the last 5 years has gone as quickly as it has, but also changed the business model to the extent that it has. So if you went back 5 years, I think you and I were probably talking about this. At that point, mobile banking was still pretty nascent. The internet bank, whilst being used really widely, was largely about servicing. Contactless hadn't launched. There was no concept of digital payments being in the marketplace. If I look now at the business, and we were sat in our trading committee this morning at Nationwide, we will be in excess of 60% digitally distributed. So fastest growing current account provider in the UK. When we last met, we were 4.5%. We would now be getting broadly 1 in 5 new current accounts. Our savings book has grown and our mortgage base has grown, but all because of digital integration and digital investment. So it's been interesting from a technology context, but technology has transformed our distribution model fundamentally.
What are some of the biggest challenges and with that opportunities that an institution of your size are facing when it comes to delivering an outstanding client experience?
It's a good question. It's very challenging when you're a very international bank in a very complex regulatory environment. Many jurisdictions have a completely different approach to regulation. And that requires you to be very, very flexible in the way that you run your business in those different jurisdictions. But of course, from a client's perspective, that adds a big layer of complexity, because whatever you might require of them to work with them in one jurisdiction could be completely different in another jurisdiction. And actually navigating all of that can be very, very complex and very time-consuming for the client. So that is probably one of the biggest challenges. The opportunity, particularly in the current environment, is to really take a step back and focus on the client and focus on the needs of the client. And certainly in my experience, if you have that singular focus on the client, you tend to navigate to the right place. And the advantage that we have with the digital tools that we now have available to us, it really makes it much, much easier to improve that experience for a client.
One thing I always find interesting about banking, people still trust banks quite a lot compared to big data companies such as your Google, your Amazon and such. Do you think that when it comes to trying to segment as one, you almost have to take into account that this person may not want to have such a personalised service because they don't trust the way that information is being used?
I think from banks, you do have that advantage that you said. They trust the organisation. You're giving them all of your money pretty much. If you don't trust them to hold on to it, then who can you trust? But when it goes further than that, that trust does change. So when you're making recommendations, well, how much information are you using and what are you using it for? I think customers will be perfectly fine as long as you're using that data in a confidential way, in a way that only affects them, and in a way that is genuinely in their best interests rather than in the best interests of the bank.
What can a tailor-made customer journey actually provide to an institution and their customers?
Bottom line, it can provide more money. And that's what every institution really wants, right? But it provides more money through having happier and more satisfied customers. Those customers are more satisfied because they're feeling like their organisation actually knows them, that they care about them, that they're not requiring them to go through pages after pages of manual forms or anything like that, that they understand that banking's dead time. It's not the sort of thing that many people sit there and go, it's Monday, it's 7:30, it's time for me to deal with my bank. They just want to deal with it as quickly and painlessly as possible. So if you tailor that personal experience towards exactly what the customers need, then you're giving them exactly what they want, and they will be far happier as a result. Once they're happier, they'll spend more with you, or they'll save more with you. You take a look at the Celent Model Bank Awards. 2 of the last 3 years, we've been very fortunate in that banks who use our technology have won them. Firstly with Bank of Montreal, where they digitized their forms and their onboarding experience. All of a sudden, their customers have gone from a very painful onboarding experience to 7-8 minutes, everything's done. From a traditional player, not a neobank. And more recently with Santander here in the UK, they've gone through their entire commercial onboarding operation, stripped out all of the complex forms, made it all digital using the Quadient software from the Inspire platform. And they're really delighting their customers now. Everything's streamlined around them. All of a sudden, that pain of opening the account has gone away. Customers love it, and they'll make a lot more money as a result of it.
So clearly, all our interviewees are all big advocates of the digital banking revolution. But as we found out, customers are now more aware than ever just how much data is being generated and shared across a multitude of industries. So how can institutions use this data in a way that benefits their customers and ensures that their trust perseveres?
With neobanks, I often get an alert on my phone before a receipt even comes out when using it for making payments. So how important and vital is mobile communications, and where could banks really improve on that?
Mobile communications are critical. They're the opportunity to be the banker in your pocket. No longer saying that we're only going to contact you when we want something, but we can contact you when we think something's happened and you might need to know about it, or we can offer you advice. And it starts to add to that level of trust again, when customers are seeing advice from their banks that help them to manage their own affairs. You mentioned the whole the receipts and getting a push notification. I think there's a real wasted opportunity there right now, because at the moment that's generally coming through either the neobanks or Google Pay and Apple Pay. And all you're really getting is information that something's happened. Well, there's a whole host of data behind that. There's an opportunity to say that smartphone push notification should be so much more rich. So it's not just you've spent £100, it's you spent £100, that means you've got £1,000 left, and based off all of the information we've got about you and the direct debits that are generally coming out, you're going to have £400 left come Friday night. Is that all right? Would you like a loan? Do you need to do something about your overdraft? Just click here, we'll deal with it for you. So again, it's not just that one-way push of information, it starts to be a two-way flow of information. You're turning a communication into the start of a conversation. You're making it as simple and painless as possible.
Does a digital customer relationship, does that have to be an oxymoron?
If you think about it the way that banks do at the moment, yes, it is a complete oxymoron. Because if you think about the current banking relationship, it's very much, we will send you data at a specific time, generally a bank statement, a credit card statement. And everything else will be when either we want something from you financially, or when you humbly come to us and request it. That's not much of a relationship. Now, you forget about banking for a moment, you think about any good relationship, it's always based off something for you, something for me, an equal trade. And that comes down to communication. The best relationships are always ones that communicate well. So if banks can start to communicate with their customers, then they'll do far, far better when it comes to the concept of a digital relationship. And digital can really help with that communication. It opens up a whole host of channels. The problem is, the operative word is with. They've got to communicate with their customers. Banks at the moment are only good at communicating at their customers. They've got to be able to listen. They've got to be able to understand. And then they've got to be able to use the data that they've got to make recommendations. to start to add a level of relationship that says we're adding value to you, not just taking money from you.
So when we last met, I think I was talking about the fact that the view that we had strategically is that technology would make things possible, but people would always make it matter, it would always make it human. Yeah, we're now in a place where if you're a Nationwide member, you can talk to colleagues in our branches through your app. Yeah, you can, if you're chatting, or we've actually done a number of pilots, we're using WhatsApp, where actually you can see the picture of colleagues in the branches and you're able to choose who you might want to engage with. And therefore what we found actually is if you humanise the technology by bringing people to the fore rather than engineering people out, what you start to see is the thing that we've been all talking about for almost a decade now, which is actually the channels properly blend, that the app just becomes in some ways an entry point to the organisation. But once you're in it, you might be able to video somebody, they could be in the branch or elsewhere, you might be able to chat to them, you might be able to call them directly, or you might just want to do your transactional banking really simply. But by putting the people to be accessible through the app, you start to humanise the technology. And it's been brilliant to see, I was in our Threadneedle Street branch not so long ago, and some of our colleagues in that branch are using the trial chat facility through WhatsApp. And you could literally see, you've wandered in your branch if you chose to open your account, or you've opened it online. Either way, you're able to connect to those colleagues in the branches where they can say, hi, thanks for joining Nationwide, welcome to the membership. If you ever want a conversation, I'm here. And actually, of course, what that means is even if you never really want a conversation with a person, you've got a face, you've got a name, and you've got a service, and it gives you that same level of confidence.
When we're onboarding a client, there's a lot of documentation that's traditionally required. Now, this has always, for many, many years, been paper-based, and you could present your client with a stack of papers that they need to sign just to open an account. Well, we're moving rapidly away from that environment where actually everything is done electronically, where you provide a tool to your client that allows them to see exactly what documentation you're going to need. They can then receive that documentation electronically, they can sign it electronically, they can submit it back to you electronically, and then they can track the progress of all of those documents as the bank goes through the process of opening the account. Now, this is just one example of the advancement in the digital age, just to the simplest task of opening a bank account. But where we've come from and where we're heading very rapidly to are two very different environments. And from the client experience, the digital tools that we now provide, the electronification and the removal of paper and wet signatures is a huge step forward and makes their lives much easier.
So how do we walk that fine line between everything being automated and that person-to-person touch, that sort of personalised experience backed up by technology?
It's interesting because we say that relationship really is at the heart of everything that we do, and the relationships that we typically have with a client are pretty broad. It might start with a lending, financing relationship, and then extend into foreign exchange, transaction banking, investment banking. There's many different areas that we can touch the client relationship. But if I think about my business and transaction services, there's first and foremost, we're an advisor. We really see ourselves as the client's advocate internally, but also an advisor in a rapidly changing environment. So that's at the heart of the relationship. But then you get into the more transactional part of the relationship, which is the day-to-day servicing across all of their needs. And when you think about how we as individuals and as consumers interact with our banks, we want to basically get most of the answers that we can electronically. You want to be able to find out information using an online tool or an app on your phone. And it's similar for our clients in the big corporate clients as well. They want to self-service to the extent possible. They want to be able to get information easily, whether that's through a mobile device or online banking tool. But also, when they've got a question, they want to be able to, if possible, self-service the answer. But having said that, we'll never get away from that human interaction. That relationship remains very, very key. And in fact, when we look at the service that we provide to our clients, and you look at what's important to them, really quality of service is pretty much top of the list in terms of how they select their banking partners. So for us, it's very important that yes, we provide the digital tools, so that there is more opportunity for them to self-source answers to the questions that they have, but the quality of the service that they get when they do pick up the phone and speak to us is top-notch.
You were recently rated #1 in Forrester's customer experience. How do you think you kind of reached that position of #1 for customer experience?
It's about simplicity. So I said earlier that our members drive the function. The thing that we have learned is that we could put more and more and more function into the technology that doesn't get used, is the reality. And it would be sexy and it would be funky and you could get excited about it, and I could phone you and say, look at this amazing new thing, and then it doesn't get used. And what the Forrester research has validated for us is develop your product to deliver the things that the membership's asking you to deliver, and then make those things really easy to be accessible and usable and experienced in a way that makes sense. And so in many ways our members have become our most important architects and drive the development agenda and help us figure out what makes next. And the fact that it's uncluttered, it's not blocked up with services that are never used or the latest great idea that's never really properly tested before it's put live, means that I hope what people are experiencing is both in the physical branch network, great people-based service, and through the technology, real simplicity of use.
Finally, we take a look at the benefits of Omnichannel, wherein digital services cooperate and work together seamlessly rather than existing on several separate channels. Quadient have been providing omnichannel frameworks for a number of businesses inside and outside the financial industry.
When it comes to the omnichannel customer experience, where are banks still going wrong?
Where are they getting it right, I suppose? It's fundamental things that they're getting wrong, and there's 3 different areas that I would say. The first one is banks still build features and functions. Generally that's because of the historical way that things are built. Things are run from an IT perspective. You've got to build a specific module or however it might work. Customers don't think that way. Customers are always on a problem-solving journey whenever they interact with you. Whether that's as simple as, I wonder what the interest rate is on my account, or whether it's as complex as, I'm the chief executive of an international organisation and I want to refinance all my properties. Every one of those is a problem and you're going on a journey to solve it. People don't solve journeys with features and functions. They don't solve them on a single channel. So people need to start mapping out the customer's journeys and thinking about the experience that they're going to get as the customers solve that problem. That leads on to the second problem, which is that financial institutions across the world are still solving problems in channel-based silos. It's, we've got this problem, we've got this feature we need to build, let's build it on the digital channel, or let's build it on the mobile channel, then let's build it on the staff channel. And doing that means that you get really good multi-channel journeys, the ability to complete any particular problem on one channel. But customers don't think like that. Customers want to switch channels at different points. They want the ability to be seamless in doing that. They don't want to have to start from scratch or have to add a load more data in or call someone up and find that there's, they've got to re-authenticate all of the stuff that they've just done online. They want it to be completely seamless. So if they can find a technology that will deal with all of those different channels, then all of a sudden you're getting reuse of the content, you're getting reuse of the rules, you're getting reuse of the teams and the operational model. You can actually start to create an omni-channel experience there rather than it just being various multi-channel opportunities. And the final thing is that there is this big gap between the sale and the servicing. There's this view that once you've created a beautiful experience to get a customer, you can deal with them however you want. And you see so many times within financial institutions across the world where they've got a great onboarding experience, but nothing after it. And if there's the old adage that it costs 3 times as much to get a customer as it does to keep it, well, why not focus on keeping those customers? So the omni-channel experience has to go beyond just the onboarding. It has to be into the full customer's life cycle. I genuinely think that if you find a bank that can put the customer before the technology, can put the technology before the channel, and can put the life cycle before the sale, they stand to make an absolute killing in this market right now because the customer experience is exactly what everybody wants.
Do you think, and a lot of banks' kind of response to this would be, well, we can't because of security and regulation. The amount of times I've spoken to organisations on Twitter and they can't help me, I then have to call them up and explain the whole thing again, go through security. Do you think that regulation is perhaps a legitimate sticking point for banks not doing this, or is it very much of a knee-jerk reaction as to why they're not?
I think it's how they interpret the regulations that's the problem. If you look at the neobanks, the big digital challengers, they'll talk to you via Twitter, via direct messaging. I opened my account with N26. I had a problem with the onboarding. Everything I dealt with was through private messaging on Twitter. No problems at all. You talk to one of the traditional players, you're right. The only thing they'll do is, can you call us on this number so we can deal with it on what they will consider to be a more secure channel. So for me, it's about just how the customer perceives the risk rather than what the risk really is. So is the risk really unsecure? There's very few channels that are that unsecure these days. You can make them secure. The question is, will the customer accept it? And that's where offering the omnichannel experience is really important. If I didn't particularly want that Twitter experience from N26, what other options could I have had that would have given me the same level of quality? At Quadient, we're pretty much unique in that we don't try and tell you what the experience should be. We let you decide. So we will provide the platform and every bit of toolkit that you need in order to do that. And then it's up to you as to whether you want to go as far as you can towards the segment of one, or whether you just want a generic communication. Ideally, you will find somewhere closer to the segment of one, but it's completely up to you. And when it comes to our software itself, we then modularize everything so that if you're a small organization wanting to scale, you don't have to pay for the whole Rolls Royce on day one when actually all you needed was a wheel, or perhaps all you could afford on day one was a wheel. But you can then keep buying as you need it. And one of those modules that underpins everything is a scaling module. So it will make sure that as you work your way from small fintech all the way up to globally systemically important bank, or if you're already at that GSIB level, then the software will scale with you and you'll be able to get all of those communications out in real time as you need them.
Well, that's all for this episode of the Fintech Show. Be sure to check out the rest of our episodes and more at fintech.finance. See you next time.